Ciao, this is Davide Biocchi speaking, and here we go for my weekly intermarket analysis. And let's start with the euro dollar. So, this currency pair is offering us the opportunity to see that the market was able to go below the very important support of 1.08. So, what next steps? Next steps will be for sure 1.06, and then we must go back to see previous. But okay, let's consider in this beginning only this first one. So, let's say that 1.06, that is really 1.062, could be, let's say, taken as the next quite important and relevant support. So, dollar very strong, especially against the euro, and let's say a potential downtrend that can continue. So, this is step number one that we have seen here. So, what do we have here today also? We have commodities like the crude oil again below the price of 100. So the main support here is around $94-$95 per barrel. The main resistance is 115, let's say 110 to 115. So this level. And for instance, we can remain considering this trending range 94-95, 110, 115. This is more or less a sideways. On the other side, in case of violation of the support that we, let's say, identified around $24, next steps will be 85. So let's say that this is the story more or less. Something, let's say, very interesting we also have on gold. The situation of the gold is that is connected not only to the fact that gold is a safe haven, but also to the fact that the gold is an alternative for the bonds. So bonds, they are doing so good considering the yield. So bonds are doing so bad and the yield is increasing and increasing. That's why with an increasing yield of bonds, we have the gold going down. Okay, so the idea is that after, let's say, this attempt to go again above the price of 2000, then there was a reaction and we are still back in the previous, let's say, sideways that we had here. And it is considering the last month story that is among the level of 1,880, even if the main support is a little bit below, and the resistance of 1,965. So let's say that we are still in a sideways here, and the gold is ready in case of a necessity of a safe haven to go fast to the previous resistance a little bit above 2000, or maybe also the previous historical high that let's say we have here at 2080. On the other side, we have also the choice of a possibility to see the support very soon because of this really strong moment for the bonds. So let's have a look at the bond. Yield of the bonds is doing really good, and that is because the bonds are doing so bad. And you know why? Well, because people, before they expect the Federal Reserve Bank to sell additional 65 billion bonds per month, they are, let's say, work in progress to sell previously. So what happened was that we had this movement on the bonds that is the same or the opposite as we have to see of the yield. So the yield of a T-bond, the 10-year note, was very close to 3%. Today is doing a little bit less, offering a little bit less, but this is because some investors are already switching from stocks to bonds. So what about stocks? Let's have a look at the European and the US indices. For what concerning the European, the first one is the EURUSD 50, where we have now the price below this quite relevant resistance around, support around 3,800, and we have seen a failure in the possibility, let's say, any attempt to go above the price of 4,000 was rejected. So this is for what concerning the European EURUSD 50. But what is more relevant is also the DAX, that we have seen really very close to the price of 14,000 and very far from the target price of 14,800, that is the main resistance here. You know, I always tell you we have a story above this price and a story below. So we are now in the below part of the story. And this is the story of the bearish situation about what concerning the German index. So let's see, this is a very important week. We will have also the GDP close to the end of the week, so we will know exactly how all these things, I mean the inflation, I mean the war, let's say, impacted the European and US markets. So we will have a look at the first quarter situation. So this will be relevant, this will be very important. Let's finally look at the US indices. The S&P 500, let's say, is now expected maybe to react a little, but we have seen it very close to the price. It's a non-return level of 4,100 here. A price below this level will mean entering a new, let's say, movement, a new era for the most important US index. And a similar situation is a work in progress on the Nasdaq itself. On the Nasdaq, the situation is very similar, and let's say the non-return price is something like 13,000. To be honest, it's a little bit below 12,970 more or less, but any close below that level will mean, let's say, completely changing the environment. So it's really relevant, and let's see if the market will go for an additional test to that level that was, let's say, tested twice recently and then showed a strong reaction. So let's see what is going to happen here. Finally, let's have a look at the Russell that is here, and the Russell is after the attempt to go back in the previous trading range that went into a failure recently. Okay, we can see it here. It's now back to the price of very close to the price of 1,900. That is the support that we have seen since the beginning of this year. So May will be the month, let's say, of a strong battle that will show, let's say, the opposite sectors like the obligations, like the bonds, and the stocks on the other side. Let's see what is going to happen, especially following any move that is coming from the Federal Reserve. So that is the key action. Thank you very much for being here. This is Davide Biocchi from Italy. Ciao, ciao. Bye-bye.